meet my friend and mortgage guru, Melissa Cohn, who leads the private banking group at Family First Funding. Melissa, with her, is her latest addition to her team, Sarah Alvarez, who,
Hi.
there she is, hi Sarah, who has her own history in real estate and on the broker side, and also daughter. So Melissa is famous for her ability to find a mortgage for any situation, and her knowledge is unsurpassed in the mortgage industry. So right now, there's so much information out there that we're looking for an understanding of what it all means. And so I'm going to ask Melissa some questions, and then I thought we'd open it up to the group for the second half of the program. So Melissa, we'll start with the first pending question on everybody's list.
Can I make a suggestion? Can we mute all the guests until it's time for questions?
That's a great idea. All right.
Can she do that? She can do that?
Yeah.
I think the host can mute everybody.
Can mute. Yep, we can mute everyone, but
Don't mute me.
yeah.
Hi, Melissa.
Yes. I'll mute everyone, and then give me 1 second.
Well, we can mute ourselves.
And then Melissa and yeah, you can mute yourself, and then Melissa or Sarah, whoever needs to talk, just you can unmute yourself.
Okay.
Yep.
Okay, there I am. Okay. All right, everyone. So Melissa, the first question is, the Fed's fund rate is now at 0, which is a big deal. How does this affect the mortgage world? Is this a good thing?
So the answer is yes. The Fed cut rates and they brought the Fed funds rate down to 0, which is great for the big banks because Fed funds is the rate at which the big banks and big corporations borrow money from the federal government. It had a direct impact on home equity loans because home equity loans are based on prime, and the prime now has dropped as the Fed has cut Fed funds to 3.25%. And that's really been the only immediate benefit to the mortgage world. Mortgage rates are generally tied to the 10-year treasury, or they used to be, and more so to the mortgage-backed security market. Now, the 10-year treasury, with everything that's gone on with the coronavirus, has dropped below 1%. And in fact, today it was trading at a 0.6%. Unfortunately, with all of the Fed's actions as it relates to trying to protect consumers and some of the stimulus, it's actually had a negative impact on residential mortgage rates. And residential mortgage rates have actually gone up in some instances. And part of the problem is that, you know, in New York State and in other states, and the federal government is now saying that borrowers will have an ability to not make their mortgage payments for 3 months, and that the banks can't foreclose on people for the next 3 months. And banks don't really want to be in the business of making mortgages to people who are not going to make their monthly payments. So what was supposed to be a benefit to the consumer has had unintended consequences of actually making the mortgage market more difficult, interest rates to go up somewhat, and actually a lot of banks and products have actually fallen off as a result of what's going on today.
That's really interesting. You know, why wouldn't I, for instance, refinance at this time? Like, should
Hopefully you will be.
You know, if we decided to do something like that, what do you see as being the process, and how long would that take?
Well, yeah, that's a really good question. The answer is that the coronavirus has caused, you know, obviously great harm to our economy. And in a weak economy, as we go into a recession, interest rates will come down. And so this will be a good time to refinance. Does that mean starting today or starting in a month? No, that's anyone's guess. With all of this shelter at home, the process is taking much longer. I'm sitting here working from my dining room. Most of the banks that I work with are working remotely. So it used to be that we could make an application and get an approval in 2 weeks, 3 weeks. I would say the average approval time is more than a month today. And even just getting appraisals done. I mean, appraisers, there are fewer appraisers that are out there working today. They're charging more money. They're taking more time because the appraisers that are willing to work have more business than they can handle. So the whole process, which used to really take 45 days, 60 days, is probably 90 to 120-day process today.
Wow.
And
Yeah.
especially on refinancings. Also, here in New York, we have mortgage tax. So in order to not have to pay the mortgage tax if you're refinancing, you'd want to do a CEMA. And the ability to get the bank that holds your current mortgage to provide the paperwork and documentation for that CEMA is also taking much longer.
Yeah, no, it's everyone has specific questions, that we're going to get to. If I deal with buyers and sellers all the time, but if I'm a buyer, what do I need now that I didn't a month ago in order to get a loan?
A job. I'm sorry.
Yeah, that's true.
It's a very interesting point because banks today, and we have a lot of self-employed people who are clients, and the banks want to make sure that the people that they're giving mortgages to today will have income on a go-forward basis. So the most important thing is to be able to show a bank, if you're applying for a mortgage today, that your income will be ongoing and that it will not be impacted by the coronavirus and the basic shutdown of our economy. Other than that, it's really pretty much business as usual.
Right.
We do also now have this delay in filing tax returns. The IRS has said the federal tax returns are now not due till July 15th. This actually helps some self-employed people who may show that their 2019 income was lower than 2018, so we can still work off of their 2018 tax returns. So there are benefits, and then there are also disadvantages as to what's going on today.
And you had said that for the most part, where a mortgage would take you about 30 to 40 days to get a commitment, it's more in the 60 to 90 days.
Well, that's for closing. It used to be that I could produce a commitment letter for someone in a week to 10 days. And to be honest, that's just not there anymore. It probably takes 3 to 4 weeks to get a commitment letter.
Okay.
But just getting all the components together, getting the title work done. I, for example, have a deal where we had to get an original survey to the title company. Well, the title companies are closed, and so we had to wait for the client to be willing to drive to the title company, drop the paperwork off in the door, the survey off in the door, then wait for someone to come in the next day to get it. So things where we used to be able to walk down the hallway to get something done, it's much harder to get anything accomplished in an efficient manner today.
Right. Well, look how we're meeting. We're not in an office, but we can reach so many other people at the same time. In an industry hit hard by COVID-19, like a restaurant, will it be harder for them to get a mortgage these days?
Yeah.
If they were?
Absolutely, because if you have a job and you're not working on that job and you can't show a current pay stub, then a bank is not going to approve you for financing. Banks, we would like to think, would say, okay, we know that when the shelter at home is released, that you'll be able to go back to work and that you'll have a salary. They'll want you to come back and make the application once you're working again. The other thing is that people are going to their banks and getting permission to not make their current mortgage payments for a 3-month period. And I can't tell you quite yet because we haven't seen the documentation from anyone in writing yet. But what banks are going to say about the fact that you didn't make your April mortgage payment while you're applying for another mortgage. So people have to really take into consideration, what is their objective? If you have a mortgage on a primary residence and you're buying a second home, you need to keep making the payments on your current residence to show the bank that you'll be willing to make the payments on that new mortgage.
Right. One more question, and then I've got one that was sent in to me. Again, the government saying we don't have to pay mortgages for the next few months without a penalty or a charge or a discount to our credit score. So if I were to refinance, is that still true of the first few months of the new mortgage?
No, the expectation with banks today is that if you're going to take a new mortgage, that you anticipate making your monthly mortgage payments.
Yeah.
Now, I know that the federal government and the state governments are trying to make it so that they don't have to make the payments. We don't really have guidance yet. It's all too soon. I mean, today is April 1st. Today would be the first day that a mortgage payment would be due under these new circumstances. So we haven't really seen specific guidelines. We haven't seen them come from Fannie Mae and Freddie Mac. But what's important for everyone to know is you can't just not make your mortgage payment. You have to get in touch with your lender and you have to get written permission to delay the monthly payments for the next 90 days. By just not making the payment, you will get reported as late.
That's a good point. That's a really good point. So if anybody has any questions, you can ask them on the right side of your screen, and we'll field them now. This question that came to me on the earlier side is from Susan in East Hampton, and she says, I'm trying to hold on to my cash, and I'm definitely not interested in selling any stock at this time. My mortgage bank does not offer the possibility of paying my monthly mortgage charge by using a credit card. Since I have major amounts of credit available on several cards, I'm wondering if their policy is based on federal or state regulations.
It's actually just it's not a federal or a state regulation. That's just a per bank policy. And one way that you could utilize your credit on your credit card to make your mortgage payment is to take it as a cash advance. Most banks today, the way they're set up with lock boxes and who you make your payments to, are really set up for you to make your payments by check or by an auto deduct. There are a couple of banks that have taken credit card payments, but 99% of the banks want just checks. So take a cash advance.
Okay, great. Well, I appreciate everybody tuning in and Melissa answering the questions that I had posed to her. So we'd love to take questions from the audience and see anybody have any specific questions that they'd like to ask Melissa at this time. You can unmute.
Yeah, Barish here.
Hello. Hi, Barish. How are you?
Hi, Melissa. How are you?
I'm good.
We never met face to face, but you pulled a miracle, helping us to close the loan in 15 to 20 days when we were denied by HSBC. Thank you for that again. So I think you already explained this, but if I was already considering refinancing because we had to close very quickly and our interest rate was not the greatest at the time and rates came down. But then this corona thing happened. Now I have, on one hand, option to defer payments for 2-3 months and apply for refinancing. And I know that deferring payments for 2-3 months will not have any interest or any penalty, whatever. But do you think it's going to affect my mortgage application or refinancing application?
The answer is potentially it can. And hopefully in the course of this next week or so, we'll get better guidance from the banks. But banks basically, they want to approve you for a new mortgage with the assumption that you're going to make your monthly payments and that you're not going to defer them. And, the federal government and Cuomo came out and said, well, I'm going to make it so that you don't have to make your monthly mortgage payments and it won't harm you on your credit report. But there was no proper communication with the banks in advance before that happened. So, it's once again, hopefully by next week, we'll be able to tell you it's okay to defer your payments and it won't impact your ability to get another mortgage. But right now, I would advise you to make the monthly payment.
And also
I think, unfortunately, the coronavirus is going to go on for more than just a month or two. So if someone's willing to give you a 3-month deferral and you make your payment this month, you'll probably have that opportunity to defer the following 3 months once we get better guidance.
Well, there's already a cancel the rent strike campaign going on social media. A lot of younger tenants they seem to think that the world is ending and they don't have to pay their rent anymore. We evil landlords are not going to be able to collect any rent.
Right, but the problem is that the bottom line is eventually someone has to make a monthly payment. So your tenants, if they don't pay you, then you don't have the ability to make your mortgage payment. Then the bank doesn't have the ability to pay their investors. And that's the house of cards that we're dealing with the banks right now, because someone's going to get hurt and no one wants it to be them.
Yeah.
Can I ask you a question about appraisers?
Sure.
So in New York, appraisers are an essential service, yes?
Yes, they are.
But what happens in a building, in a co-op or whatever, that's not allowing anybody in? Do they have to allow the appraiser in?
No, a building does not have to allow the appraiser in, but that person will not be getting a mortgage until that appraiser can actually go in. We do have some banks who have started the process of allowing exterior appraisals only,
Mhm.
especially if you're refinancing, meaning that they just do a drive-by. And with so much access to information, we can find the listing on a property, we can find photos, and so appraisals will get done.
And then how are you finding, if you are at all, closings in terms of certainly co-op in the city? Like, you know, if you can't move in and you can't move out.
I mean, we have people that are still closing. They have rate locks that are expiring. You know, even with COVID, banks are not automatically extending rate locks. So deals are happening, closings are taking place. You know, you go to a closing attorney and there'll be one party in one room, another party in another room.
Yep.
Pass papers underneath the door or through windows. You know, and we're starting to try to work on doing electronic closings. We have them elsewhere in the country. New York banks have not really jumped onto that bandwagon yet, but we will see more, you know, being able to close by power of attorney. So it's just 2 attorneys that are dealing with the closings. You know, people are starting to really.
One last question then, and you might not know the answer to this, but have you seen in any of your closings, if you can't move in and you can't move out, do they close and rent back to the current owner, or you haven't?
I have not had that issue yet.
Got it.
But that's a good question.
Thanks.
I have a friend who that's happening to. It's a house on Long Island, and they're just leaving extra money in escrow for now. And they've negotiated a 3-month period, and if it goes beyond that, every day beyond is $500 a day to stay. So
What we find out here on Eastern Long Island is that most of the homes that I sell, or that real estate agents are involved with, are second homes. So I haven't come across it yet. I'm sure if it hasn't happened yet, it's going to be happening, where there will need to be some kind of money held in escrow for a holdover.
Well, for example, I have a deal that's happening out here, and the seller who lives out of town can't get into New York to move their furniture out. So someone is going to take their personal possessions out, and the buyer is actually paying money to be able to utilize the furniture, so that she has a house that she can actually use. I mean, people are going to get really creative, and I think the good news is that we're seeing people that still want to be involved in the real estate market today, and that's the most important thing.
Yeah.
Melissa, can you see me?
I can. Hey,
How are
Jody.
you?
I'm good.
Good. This is very informative. Thank you.
Oh, you're welcome. But, you know, I think that, you know, with everything that's going on, things are moving so fast, and yet they're moving so slowly. You know, banks are not as nimble as we would like them to be. So some of these policy guidelines, we're getting new guidelines every day from the banks, but it'll take a couple weeks. And when that happens, we'll get something out to all of you that sort of highlights any of the significant changes that have been made. And
so I have something interesting to tell you all. I closed a week ago a sponsor sale in Quality Ruskin in Queens, and it went fine. The checks were lost. So I had the opportunity. There was a deal with the stock certificate was not done correctly, and the buyers were uncomfortable. So Jody drove in the next day, fixed the stock certificate, came back with it, and they gave me the checks. And I had the opportunity to either go in the next day and drop them off in the office, but no, the owner of the company said, overnight it. Hasn't arrived yet. And those are big money. And it's it's also my commission check as well. So that's being stuck in a big room under a lot of piles of envelopes. So, but it closed. But what I'm stressing out mostly is that it did close. So closings do happen by mail or power or separate rooms. And that's what's just going to be the new normal if they're going to close it all.
Right. Yeah. If people want to close, they're closing, and they're finding a way to close. I mean, I will admit, and I'm sure we all have seen people who have backed out of transactions as a result of what's happened in the past month. but there are also still people that see this as an opportunity and are willing to come into the marketplace. Now, the good news as it relates to banks is the banks are still lending. We had a bank up until last Friday that was offering 100% financing on purchases. Now they'll go to 95% financing on purchases. So while they may be offering slightly less financing, there's still plenty of banks out there wanting to make mortgages, with one big exception. And that is that if you have buyers that needed to take advantage of what we call the non-QM space, the bank statement programs, the light doc, the no doc programs, those programs have pretty much disappeared. The disruption in the secondary market and the liquidity issue has really taken all of the non-QM lenders, and they've stopped lending for the meantime.
Got a question for you, Melissa. So typically co-ops, and basically a response to the other person who was talking around the city. My co-op, where I'm still on the board, we're not allowing move-ins or move-outs and no interviews until COVID is over. So people that
interviews.
Sorry?
I have a client that's getting a Zoom interview.
Okay, I will mention it. It's not my deal, but I'll still mention it. How long could it possibly extend to? I mean, the package is with the board as of 2 days ago. So the board president will schedule the interview 3 weeks after he has the package. Probably won't happen. At what point could it be a problem for the buyer, pissed off, the bank, those two entities, basically? I mean, it could, who knows how long this is going to go on. Hopefully it's not going to happen until maybe June it will be over.
Well,
what do you think?
You have to deal with the fact that, people lock into interest rates. Banks are not extending interest rates for free just because of COVID-19. And
so it's going to be
your buyers to get frustrated with the transaction. You want them to want to go ahead.
Right. Well, soon to be continued. ...
So I have a quick question for you, Melissa. What are you seeing globally? So with everything that's happening in mortgages in America, is the same thing being mirrored in Europe and in England? And
I can't imagine that it's not. I mean, we're all basically in the same boat. And we came to the party late in terms of the shelter at home. In Europe, they shut things down much more rapidly. And I think that it'd be much harder. I think it's still easier to get a transaction done here than it is in Europe, where the banking system is much more antiquated than it is here.
thank you. And thanks for this great information.
My pleasure.
So the prices, the values, did they start getting adjusted because of the coronavirus, or still crazy?
Not yet. I don't think yet. No, I think the numbers are still the same. I think everything is just in limbo. It's in quiet mode.
Yeah.
Nobody knows whether or not to go outside. I mean, I'm in Queens. It's the epicenter. I'm in Long Beach right now, and it's like 100 cases. And I feel much more comfortable being out here. And I'm not working because, we're not supposed to. So I've done virtual. Thank you, Christine. I did 3 virtuals, but it's only so much I can do with it. And
we're in Astoria, and we have a development property. We were planning to start development next year, potentially 24 units, but with the next door neighbor. But I don't know what's going to happen now. So we'll see.
I don't know. When I say one day at a time,
Yeah.
and I've always lived my life that way. And this is obviously longer, but it's the only way to survive. Because if you think about the long term, it's like, oh my God, another month. But it's going to be another month, and who knows?
And we're resilient people, and we'll bounce back.
We are. It's the best industry to be in, guys. I mean, it's the best industry. And of course, the moderator and Christine and everything. It's you got to just go with the flow. But this has been great, Melissa.
Yeah, Melissa, thank you very much for coming in and answering any questions. Does anyone else have anything that they want to ask Melissa before we start to wrap it up? Be anything.
Sarah, what's going on with the rental market out here?
It's very busy. The rental market's very busy. I have been very crazed with it. People are all of a sudden, it is the Memorial Day through Labor Day time period has come back full swing. And if it's not Memorial Day through Labor Day, it's April through Labor Day. So we're seeing a lot of that. We're seeing a lot of April, May, June rentals. The prices for
I'll see it.
The prices for April and May have really increased beyond where they have ever been before. But we're in a time where it's unprecedented. We've never seen anything like this before. And the fact that you pretty much can't get into a home and you can't show a home and everything's being done virtually. And if somebody wants to rent it, there's risk on both sides. But the home is the sanctuary, and everybody wants to be out here. Certainly,
That's what it is. It's almost like safe haven almost.
Yes.
I mean, I'm in Queens. I come out to Long Beach. We took a walk. I was like, it's so good for your psyche. So I can understand why people are flocking to you. And good. And congratulations. It's good to be busy during this time.
Yeah, it is. It is. It's a lot. It's a lot. I've taken on the teacher hat too with the distance learning. So there's a lot of professions in my pocket at the moment.
They're a busy household.
You could say that again. Anyway, Melissa, thank you so much, and thank you everyone for tuning in. And if anyone has any other questions, they can certainly email Melissa directly, or reach out to me. However it may be, and we'll get those answers for you. And like you said, Melissa, over the next week, 2 weeks, we're going to be getting a lot more information. You're going to be getting a lot more information about what's possible and where everything lays out.
And I'll absolutely keep you all posted.
Wonderful. Thank you so much.
Bye, guys.
Thank you.
Did you see there's a question?
Oh, is there? Sorry.
Yeah.
Yeah,
Go ahead.
this is a question for Sarah.
Sure.
Why haven't you rented my house yet?
Who is that? I can't see your face. You haven't shown your
Susan
face.
Smithman.
Oh, Susan. Hello. I did ask your question. I asked it right at the beginning. But as far as renting your house, hey, I'll keep it in
Please.
mind, Susan. I'll keep it in mind.
My sale deal died when the COVID hit.
Yeah, a lot of things went on pause.
Yeah, so.
Yeah.
The question about rate volatility in the conversation.
Yeah.
Did you see that, Melissa?
Oh, now I see it.
Okay.
So the answer is banks are absolutely willing to commit to rates, but they're willing to commit to rates that they're willing to offer you. So there's a tremendous amount of disparity from rates from one bank to the next. So
Why is that?
There's basically risk reward. Some banks are saying we don't like this marketplace. There's too much uncertainty with regards to the economy and what's going to happen. So my rate last week was at 3.5%, but if we're willing to make that mortgage to you at 4%, because we're willing to, that pays for the risk. There are some banks that have come out and will not let you lock into a rate until you're actually clear to close. Quicken Mortgage is the biggest example of someone who's doing that, and I'm sure we'll see that coming up with other banks, because what's the point of locking in for 30 days or 45 days or 60 days if you won't actually be able to close in that time frame?
Right.
Is there any way, Melissa, to get an answer about what a bank's doing if they won't give you an answer through their email system and you can't get anybody on the phone in terms of deferral?
Unfortunately, the deferral is not really it's not just sort of a national mandate. It goes bank to bank, and not every bank is actually honoring the deferral of the payments.
Yeah.
So you just have to keep calling and emailing, dialing for dollars.
Charming. Okay.
Sorry, I wish I had a better answer to that one.
Oh, I know. I wish you did too. Okay, thanks. Thanks, Sarah.
Oh, thank you for coming. Appreciate it.
Thank you.
Thanks, Melissa.
Oh, thank you.
Thanks, Melissa.
All right.
Thanks,
Thanks, Melissa. We'll have
Bye.
a lot more questions as the days and weeks unfold. So we'll check back in again.
Okay, look forward to it.
Okay. Thanks, everybody.
Bye.
Bye.